Hey, we're back to looking at Micron technology. So that's ticker symbol MU. We're going to go over their quarter two results, some other news related items, and then we'll look at the technical analysis for this stock. Just to catch us up a little bit, the last time we looked at them was on March 17th, so about a month and a half ago at this point. It was at the time trading at 56. We're now at 61, nearly 62. Uh, if we take a look about a month ago, this is the 1 month chart on the screen. About a month ago, it was at 58. We said 56. It looks relatively flat if you just look at our beginning point and our end point, but clearly this stock has had a decent amount of activity, reaching close to 64 and as low as 56. So once we get to the technicals, we'll see if our buy point or resistance point changes. We had a buy point of 49 marked out. It doesn't look like we came really close to it, the closest being 56, and we had that resistance at 64. It looks like we got very close to it a couple times, even touched it at one point. So we'll see if that needs to be updated. But before we go into that, we will look at their quarter two results. And as we dig into this, I just want to say if you have any questions, by all means, let me know in the comments. Or if you think I missed some news, by all means, I'd love to read that. So let me know in the comments there. But with that out of the way, so I jumped to page 5. This is their, what was it, Q10, I believe, their quarterly report. So on page 5, that's where the good stuff starts. That's their financial statements. And this is their income statement. So right off the bat, what we're seeing is a disaster quarter for them. But I guess this was kind of expected. So right here in the middle, we have the quarter ended for this past quarter, ended on March 2nd versus March 3rd of last year. And you can see the revenue dropped by nearly half. They, through one quarter last year, they made close to like $7.7 billion. This year they made about 3.6. And guess what? The cost of goods sold actually went up. Ultimately, it was relatively flat comparatively, but the ratio is way off. I mean, so over here on the right side, we have the 6 month ended. So, halfway through their fiscal year. And you can see last year they were making $15.4 billion, where this year they're making 7.7. So that's literally like half. That's literally half of revenue. While the cost of goods sold stayed relatively flat, going from 8.2 billion to like 8.1 rounded in cost of goods sold. So that's wild to see that. They really just don't have pricing power, which when we looked at other semiconductor stocks, they typically do. So they're an odd one here, and I guess that just has to do with the fact that they're memory based as opposed to chip based. But yeah, so that was like the one thing I wanted to point out on this one. If we scroll down to the balance sheet, did I pass it? Where is it? Here we go. So for this one, just some items are the current assets, about 22 billion, versus current liabilities, about 5. So they have tons of assets available to stay keeping the business afloat. Let's see, something else here. Inventory continues to go up, which I suppose that makes sense considering a lot of the other chip stocks were saying they are experiencing inventory buildup and just orders are not coming in as frequently. So this kind of makes sense to see it with Micron too. AP went down, so that's down here. So they're making payments, which is good. AR also went down, which means I have to figure that aligns with customers are not paying, or I'm sorry, not ordering as much. So these things are kind of tracking. The only thing that I don't like is the fact that inventory is continuing to go up. The other things, that's just kind of normal with business, but the inventory continuing to go up, um, not a fan of that, and you'll see why a little bit later. What else we have? We have long-term debt, which is down here. That nearly doubled, which is crazy, crazy. But I mean, I guess the reason why I think it's just wild is because when we look at their current assets, like it seems like, and then just cash alone, it seems like they have enough money. So I'm not sure why they're pulling out so much debt, especially when like interest rates are really high now. I'm just not understanding the play with that one. Uh, so yeah, I mean, if you have any thoughts on that one, that's like I know they have expansion plans, but to pull that much, I mean, that's the only thing that makes sense. Um, but let's skip down a little bit further. So page 10, this is the statement of cash flows. Um, I wanted to point out this was a big item. Uh, Provision to write down inventory. Again, they must have built it up so much, and also the fact that they don't have that pricing power. That means they had to lower their cost, um, and they had to write off inventory. That's crazy. That's so much of it. $1.4 billion. And then, of course, I mentioned it earlier, but the issued debt, um, it looks like, at least compared to last year, it went up 3 billion. So I guess it was like split between quarters, but overall it went up roughly $6 billion in the 6 months. If we skip down a little bit further to page 29, so some of the segments, this is really where I'm focusing on. Again, if we look quarter over quarter and even month over month, we can see the CNBU, and here's what these acronyms stand for up at the top. So we have the C for computer, M is for mobile, E is for embedded, and the S is for storage. So here we have the computers cut in half by more than half. We have the mobile devices, that's cut in half by more than that. The only thing that kind of held up was the embedded. Even it saw a hit, but it wasn't cut in half. It was more like they took 25% off from the top, and so it wasn't as bad. And the EBUs, that's more for the automotive and industrial. So I guess that makes sense considering like the EV market's like one of the key buzzwords for this market segment, the semiconductors. So it's nice to see one of those units held up. And then, of course, storage cut in half just like the rest. So that just seems to be what it is for them right now. If we continue on, page 32, here again, they just go into that. They cut $1.43 billion in inventory. They're also projecting 500 million of additional write-downs in the next quarter. So things are not going to be getting better for them anytime soon. Clearly, they wrote off what they needed to, but it looks like it's going to continue. Hopefully, that is the last quarter that they need to do this. Again, it's not really impacting their income statement, but still, I mean, this should just not be happening. I don't think they're throwing away these products, but they might be. I mean, that's kind of the worry, is they spent all this money to, produce these products just for nothing. And then the other thing was they're reducing their head count by 15%. Here it is. So under this restructuring plan, they expect to reduce their head count by 15% by the end of the year. So, I mean, you kind of have to, considering what's going on with them. Then if we go to the next page, again, just a disaster. I mean, with technology companies, we really want to shoot for like a 50% gross margin. And you can see last year, second quarter 2022, we were there. For the 6 month ended, 47%. Second quarter, 47%. I mean, that's what we strive for. I mean, 22 is okay last quarter, but negative. I mean, this is just not good. So if anything, if if we truly believe in this company, I mean, this has got to be the lowest of the low, because we have to imagine this is going to bounce back at some point, and we'll kind of go into that a little bit when we get to the news articles, but this is very low. I think there will be a silver lining to this when we kind of go through everything. Uh, but yeah, just right here in this moment, looking at these numbers, it's terrible, just terrible. Operating income, negative 62%. I mean, this was decent, 33% last year. Now all of a sudden down 62%, negative 62%. And then ultimately, when we get to the net income, it's down 63%. 30% is nice, and that's what it was last year. If they can, I mean, they just got to break even at this point. So some of the reasons it goes into it where, at least for the second quarter for 2023 compared to the first quarter, you can see approximately 20% decline in average selling price. So that goes back to the whole pricing power. And then if we, it's right here. So then for the year to date, for the 6 months, there's been a decrease of 50% in sales. And yeah, that's a tough break. And that's for both the DRAM and the NAND sections. And that's like their two main sections. So let's actually look at what the CEO and the CFO are saying. We're going to focus more on the CEO for this one, which is this guy, Sanji. If we scroll down a little bit, let's see. Did I mark it? Okay, I guess I thought I marked it. The points I wanted to touch on were, let me just find it. Let's see, similar, where is it? Okay, so we also continue to lead the industry in QLC. I looked this up before. It's some sort of battery or I don't remember. If you can think of it, let me know in the comments. But QLC, it accounted for 20% of the NAND bit in their physical quarter two. This also yields on 1 alpha DRAM and 176 NAND, and also this 1 beta DRAM 232 layered NAND. And then they have this other product that they're expecting to come out, which is their EUV based 1 gamma node in 2025. So a little bit down the road, but similar to our 1 alpha and 1 beta nodes, we expect this node to provide us with competitive performance, power, cost, and density improvements. So that's very good. And this kind of leads into, where is it? It leads into the auto and industrial end markets, which are now representing 20% of their revenue. Right here, the auto and industrial end markets, which now represent our 20% of our revenue. Quarter two, auto revenue grew approximately 5% year over year. So again, this is kind of lining up with what we saw and how that was like the least effective industry. He goes on to say inventories are starting to stabilize as the majority of our customers, and we expect demand to improve in the second half of our fiscal year. Of course, as we saw, they're still expecting write-offs in inventory, but I guess it's lessening, so the curve is, hopefully flattening out, and hopefully we see an uptick in the future. Where is it? Our expectations for calendar year 2023 industry bit demand growth have moderated to approximately 5% in the DRAM and low teens for the NAND. He also goes on to say this is below the expected continuous annual growth for DRAM. DRAM was supposed to be in the mid-teens on average per year for, I'm not sure how far into the future this is. I would assume at least 5, maybe 10. And then low 20s for NAND. Again, so it's going from mid-teens to 5, and then low 20s to now low teens. So hopefully that picks back up in the near future, but this year clearly was a down year. Uh, we expect that improving customer inventories will support sequential bit demand growth for DRAM and NAND through the calendar year. China's reopening is also a positive factor for calendar 2023 for bit demand. Let's see. We now expect that the industry bit supply growth for DRAM and NAND in calendar 2023 will be below demand growth, which will help improve supplier inventories. Okay. Micron has, let's see. Micron has taken a number of decisive actions. Where's this at? Micron has taken a number of decisive actions in fiscal 2023. First, we are further reducing our supply. Again, going to the inventory, we have made additional reductions to our fiscal 2023 CapEx plan and now expect to invest approximately $7 billion, down more than 40% from last year. Again, trying to save money. And we now, where is it? We now expect our, oh yeah, and so where is it? We now expect our overall headcount reduction to approach 15%. So again, a lot of kind of summary from our Q2 review. If we go into what was the market thinking? Micron announced this $1.91 loss in per share on revenue of $3.69 billion. Analysts were anticipating only a 66 cents loss on $3.74 billion. So that's interesting. They barely missed the revenue aspect, but they were terrible on the per share basis. Very crazy. Company said, where is this? The company said, did I skip it? Company said data center revenue had likely bottomed in fiscal Q2 and expect to see revenue growth in Q3. Overall demand for 2023, however, still faces headwinds as customers work through elevated inventories and its end markets face a degradation in demand. So we'll see how this plays out. 2023 industry bit demand growth have moderated to approximately 5%, kind of repeating the same things. Again, the CAGR thought demand would be up here for the annual growth, but this year is clearly a low year. So we're expecting a bounce back at some point. And then the last thing is for fiscal Q3, Micron sees a loss in a range of 151 to 165 on 3.7 billion. Wall Street's expecting only 92 cents. I don't know why Wall Street's expecting such a drastic difference to what Micron's saying. I mean, it's like they want them to lose. I'm not understanding that, how they're making that call. If we go on to the next one, we have Micron on Tuesday forecast Q3 revenue would tumble nearly 60% from a year earlier. Man, it just does not look good for this company, especially today. The CEO, Sanjay Mehrotra, told analysts on the earnings call that he was confident about the long term and said the memory chip industry would see a record calendar year 2025 in terms of market size. He also goes on to say, let's see. Oh, I just thought this was a little fun fact. So DRAM is the memory that erases when the device is turned off. NAND stores the memory even when the device is off. Just thought that was interesting. And then Sandina said that despite the near-term challenges, the new factories in Idaho and New York are on schedule to start construction this year and next year respectively. So they do have a couple new factories, and again, I think that's where the debt was coming in from. Uh, Clearly, they don't need crazy factories like Intel and TSM, who were building like $20 billion factories. I mean, yeah, they only need like 6 billion. I mean, Idaho, I can't imagine it's uh, much to build something out there. And then the New York facilities in a place called like Clay, New York. So clearly not by the city, but uh, clearly they're saving money on location for that. Next we have, what's this? This one is right here. So Micron CEO Sanjay expects that the memory chip industry, total addressable market, TAM for short, to reach a new record in 2025. So again, if we buy low, it sounds like records are going to be broken in a couple years. So something to think about. And he's saying it's going to be driven by the rise of LLM-style AI technologies such as ChatGPT and Alphabet's Google Bard. Also going on to say the AI technologies require enormous amounts of memory and storage to operate effectively. And the LLM relies on very large banks of DRAM, and that's that erases when you turn it off chip. And he's just saying the more the better. So again, we'll see how AI impacts these chips. I'm very interested. And then going into China, so Micron has facilities in China, and if you are unaware, China's been going back and forth with America on these chips. And wouldn't you know, the United States, represented by Micron in this situation, has a factory in China, and all of a sudden China wants to audit this company. So it goes on to say China's internet watchdog is launching a cybersecurity investigation into the local sales of U.S. memory chip giant Micron technology to safeguard national security, signaling an increase in tech tensions between the two largest economies, China and America here. Let's see. It is also the first time that the Chinese government has targeted a U.S. semiconductor company. So again, I don't know if they're just throwing their weight around or if they really have a concern. Either way, they're kind of getting their message across, because that's what America keeps saying is China's kind of stealing their data. Well, China's now saying Micron might be doing that, but I don't think Micron's really selling to the end user, so it's not the same here. So I'm not sure what's going on, but Micron has had a bumpy relationship with China in recent years as the country's domestic memory chip makers, including this YMTC, has been expanding their operations. The DRAM market, Micron's main product, that accounts for nearly 3/4 of its sales, currently has a supply glut, with the average DRAM prices down 20% in the first quarter of 2023 compared to the previous quarter. We kind of touched on that. Some important information here is China accounts for 10% of its total sales. So, I mean, clearly that's a big market for them, and I'm sure they haven't reached the full potential. But 10%, I mean, I guess on the positive side, clearly that's not like a major factor. I mean, I'm sure there's companies that have like 20 or 30% of their revenue coming from one source. This is 10%. I feel like they could work around this. And the reason I'm saying that is because Micron has previously warned on the risks of being excluded from the China market. Further saying that here it is, the Chinese government may restrict us, meaning Micron, from taking part in the China market, or may prevent us from competing effectively with domestic products, because China may institute something where you need to buy domestic. And so Micron's worried about that, and apparently so worried that Micron last year closed its DRAM design operations in Shanghai and relocated. I don't know if that's really true. If it's because of this worry, it's probably just a coincidence. They probably found a better deal, but they did relocate their design operations in Shanghai to uh, the U.S. and India. Not sure exactly how the split worked, but they did relocate out of China. More on the China front, if we just scroll down, so again, this is the cybersecurity review. Here's a nice picture of Micron. But if we scroll down here to the bottom-ish, we can see that Feng said, and Feng is one of the leaders uh, in the China government, I believe. Feng said that China could impose various penalties and restrictive measures if Micron's products were found uh, to have cybersecurity issues. I don't think that's going to be the case, but he goes on to say fines would represent the mildest warning for Micron. If there is no remorse or any change implemented by the company after the review, the next step could be restrictions or even a ban on market access. And so clearly that's like the big concern of this is if they fail and don't comply, which I think they're going to pass. And even if they don't pass, I'm sure they're going to comply because they don't want to miss out on 10% of their revenue. I mean, that's just insane. So I'm sure everything will work out. It's a unique thing that's happening to them. They do go on to mention, as part of this China probe, that the investigation isn't affecting its ability to deliver products. So it seems to be very professional. No hard feelings so far. But that pretty much wraps up the China issue. They now have some other venture that they're doing here. Micron today announced the formation of this Northeast University Semiconductor Network. It's meant to create the next generation of the U.S. semiconductor industry's workforce. If we scroll down, this is going to include 21 founding member institutions and the publication of Dear College Letter. Not familiar with the Dear College Letter, but 21 universities. Micron is taking bold action to cultivate and support the collaboration between institutions of higher education to develop a diverse and robust STEM talent pipeline. Just like STEM, this is part of a STEM program, I'm sure, but they're actually taking it to the next step where they actually want to set up a model that we look forward to in advancing in other regions. So this would be, I think the aim is that they actually want to build like programs that would help people just like jump right into this type of job force. If we scroll down a little bit further, NSF, which if we scroll back up, that is the National Science Foundation in the title. NSF solicitation announced today is the next step in the partnership between Micron and NSF to jointly invest $10 million to fund and develop semiconductor curricula in colleges and universities across the country. So that's the point I was making earlier, that these two are now actually going to create actual classes for this. I know that's not my line of business, but I would kind of be curious to see what that's about, just to sit in. And we're scrolling through a bunch of like the universities that are joining this, but there's a list down here at the bottom. So again, this is the Northeast, so that's where all these schools are based. But just some of the big ones, I mean, we have Ivy League schools like Brown, Cornell, Columbia. I'm not sure if they're Ivy League, but Harvard, MIT's in here, Penn State, Princeton, Virginia. We have 21 schools, very big name schools that are all joining this Northeast Semiconductor program. Announcements expand on Micron's commitments in Central New York. And again, this must have been a caveat to the deal that they made to build a factory there, like a plant, because in October 22, the company announced the selection of Clay, New York, as the site of the new mega fab that will increase the domestic supply of leading-edge memory and create nearly 50,000 New York jobs, including approximately 9,000 good-paying Micron jobs. So clearly, the plan is to hire, it looks like 9,000 jobs on site, but they're saying that that type of job growth in, I guess, this area is probably going to branch out into potentially 50,000 jobs within the states or the nearby communities. So I'm sure that impacts them in terms of like tax breaks or whatever. It doesn't go into that, but very cool that they're kind of, this is kind of, they're helping themselves with this program, but it also helps them reach their New York commitments by creating something. So again, a win-win. Always like to see that. This is our last article before we get to the technicals, which I've been waiting for. The memory chip maker Micron, they had this, someone called them out. So the U.S. Justice Department said on Thursday it reached a settlement with the memory chip maker Micron to resolve an allegation of immigration-related employment discrimination. And so this justice said it determined that Micron unlawfully preferred a temporary visa worker for the position, failing to meaningfully consider the U.S. citizen's qualifications. This suit ultimately is going to be, this person's going to ultimately be paid $85,000 in back pay, and that settles it. So clearly they did something wrong here, so you don't like to see that. It didn't really cost them much, but still, I mean, I don't know. That one's weird. Not a fan of that, but I don't know. I don't know what the situation was like behind it. I'm sure there was more to it, but ultimately, in terms of the money aspect, it wasn't that big of a hit. So I suppose it was okay. But finally, the technical analysis. We made it. So right now, what's very surprising to me as we look at this one. So number one, I mean, going back to about June of last year, so almost a year, it's been trading in this range from about 49 to 64. That's number one. The second thing that's just very surprising to me is the fact that we just went through all their financial statements and went through all this information, seeing that this is just a terrible quarter, that you almost can't imagine that they're going to do worse. Apparently quarter three is probably going to be just as bad, maybe not worse, but it's going to be very bad. And yet it continues to trade within this range, and even today it's on the higher end of the range. So that is just very surprising. Like, I would have thought, based on this news, I mean, when the quarterly report came out on the 30th, so about a month ago. So a month ago, we were here-ish. Or, I'm sorry, March 30th? Yeah, March 30th, and we're at like like $60. We're at $60. They just came out with the worst report ever. Leading up to the report, they grew like about $6 in value. All of a sudden, the report is as bad. I guess it wasn't as, it clearly was as bad. Wall Street was expecting their losses per share to be something like 56 to 60 cent loss. They put up like $2 loss. And yet this is the pullback they get, $1. The next week, another $2, it looks like. And then all of a sudden it's back up. This one is very peculiar. My first initial thought when I see it behaving this way is people just are looking that far in advance. And by that far, I mean 2025. Based on what the CEO is saying, this company will turn around in about 2 years, seeing like the greatest market. If we take his word for that, then, I mean, why hasn't this gone higher? You know what I mean? I think it's kind of split between people who see that and believe it, which I kind of do, versus the people that are like, I'm looking at the numbers and it's just not adding up. So we're getting like, I think overall this is good for us because I do want to kind of build out Micron into a position, not a major one, but just to kind of have it because I think this one will just continue to grow over time. If we scale back, I mean, this has gone up to close to $100 at one point. I think we'll see that type of activity again. Uh, Maybe like 2025, like you said, when we have a new cycle come out in about a year and a half to 2 years. But for today, I think what's going to happen, I mean, we could argue that we're kind of in this uptrend here, and I can even draw the bottom end of the uptrend. If this connects, we kind of have, we'll just say like that, and we'll make it purple, or we'll make it like an orange, just so it stands out a little bit for us. We could argue we're in this uptrend. I think it's a little bit too early. I want to see what happens here. If this was the dip for it, then we're in this uptrend. But I think what's more likely happening, and we'll keep this in just for now, I think what's more likely happening is it's just consolidating between this range, and possibly it's now consolidating between 56 and 64. So for that, again, just based off how bad the results were and the following that is still here with this company, I'm actually gonna add a second buy point to this and say 56. 56 is that blue line that we have. And again, I guess the reason why I'm kind of optimistic about that is because when this company crossed the 56 barrier back in like January, mid-January, it stayed up, sure, it trended down, it even went through the line, but the very next week it bounced right back up, and now here we are again. Even after terrible results, that did not bring it down. So I think we have pretty decent support at about 56 at this point. And I think it really just has to do with people are just buying into this is the worst it's going to be. This is clearly the worst. We knew it was going to be bad. It was bad. In fact, it was terrible, but this must be the worst. And if it's not the worst, quarter three is going to be the worst. And then we should see better churn in terms of inventory, better profits. But I think people are just going to stick this one out. I think if we're lucky over the next I guess at this point just one quarter, if we're lucky over the next one quarter, we'll see this one maybe pull back, preferably to about 50 or maybe below 56 again. And if that does happen, I think that's going to be a great time to buy. But for now, if you can get this one closer to 56, great. If you can get it closer to 49, which is the green line, that is optimal. So let me just kind of update my tracker here. I added the buy point. Resistance we're going to keep at 64. We'll see how that goes. And then the date, we'll update that. In terms of news, we're expecting terrible Q3. Should be good from there till 2026, we'll say. And then let me wrap that. Okay, so this is just a quick update. And again, I realize this was long. Micron just had a lot of stuff to discuss clearly. But here we go. Micron at the top. Currently it's at 61. Buy points marked at 49 and 56. Resistance at 64, so it's getting very close to that. And right now we're expecting a terrible quarter three. It should be good from there until 2026. We'll see how it goes. We'll see how it plays out. I'm sure that node will get adjusted and maybe these numbers will get modified. But for now, that's how we're seeing it. And again, if you have any questions or want to share anything news related that maybe I missed, by all means, let me know in the comments section. I'd be happy to read that or answer your questions. But with that out of the way, thank you, and please like, subscribe, and I'll see you on the next one.